Is the market ready for a major shakeup? Renowned market strategist Tom Lee has made some bold predictions that could drastically impact your investment strategy for the rest of 2024 and early 2025. With less than 35 days until the next U.S. election, economic uncertainty is mounting. Furthermore, Lee sees both opportunities and risks on the horizon, especially for Bitcoin and the cryptocurrency market. Could Bitcoin really double in value, as Lee suggests? Let's dive into what's happening and why now is the right time to stay informed. Hello everyone and welcome to our channel dedicated to the world of cryptocurrencies. Here you will find market updates, project reviews and advice to help you make informed decisions in the world of cryptocurrencies. I invite you to follow me on the channel to always be updated. Tom Lee is no stranger to bold market predictions. He made headlines earlier this year with his prediction that Bitcoin would hit $150,000 by the end of 2024. But in his latest interview, Lee upped the ante. He now believes that Bitcoin could go as high as $160,000 or even $180,000, but there is one important detail: it all depends on the approval of a Bitcoin ETF in the United States. Lee points out that demand for Bitcoin is already outpacing daily supply, and if the US approves a spot Bitcoin ETF, prices could skyrocket. And this isn't just speculation. An ETF like this would fundamentally change the way institutional investors approach Bitcoin, making it much more accessible. But what if the ETF doesn't get approved? In that case, Lee predicts Bitcoin will remain around $129,000, a significant difference, but still higher than recent levels. Why is a Bitcoin ETF so important? An ETF would allow traditional investors, such as pension funds and hedge funds, to buy and hold Bitcoin without having to deal with the complexities of directly managing the cryptocurrency. Currently, Bitcoin is still relatively niche in the world of institutional investing, but an ETF could quickly change all that. Lee even suggests that the price of Bitcoin could triple in the near future. The combination of increased demand, especially with the approval of the ETF, and the reduction in the supply of Bitcoin, due to the upcoming halving in 2024, creates a perfect storm for a huge price increase. Additionally, a potential loosening of monetary policy by the Federal Reserve could support riskier assets like Bitcoin. However, it is important to note that Lee's forecast depends on several variables. If monetary policy tightens or the ETF is delayed, the timeline for these gains could be shifted. However, the overall outlook for Bitcoin remains bullish, as it is increasingly seen as an inflation hedge and a safe haven, especially in uncertain economic times. While Lee is bullish on Bitcoin, he acknowledges volatility on the horizon. With the upcoming U.S. election, rising tensions in the Middle East, and a potential dockworker strike, the market is bracing for turbulence. Lee advises that despite these short-term headwinds, investors should be prepared to buy on dips. His logic? Market declines during times of uncertainty often present opportunities to enter at lower prices before the next uptrend begins. Historically, buying during times of fear and uncertainty has paid off for long-term investors. Lee cites previous market corrections, noting that sharp, yet painful, declines are followed by strong recoveries. This occurred in the early 2000s and again after the 2008 financial crisis. Lee also points to past market disruptions and conflicts. Interestingly, he notes that markets tend to rally after major geopolitical events, such as the Iraq Wars. The exception was the 2022 Russia-Ukraine war, when the market was already struggling with the Federal Reserve's tightening cycle. This was a rare occasion when buying the dip wasn't immediately profitable. So what are the biggest risks investors should be aware of? Lee highlights two main concerns: the possibility of a prolonged dockworker strike and rising oil prices due to tensions in the Middle East. Both scenarios could disrupt supply chains, cause inflationary pressures and weigh on corporate earnings, especially for S&P 500 companies. Lee explains that the longer a dockworkers' strike lasts, the greater the impact on the economy. For every week of a strike, GDP could decline, potentially reducing it by a few percentage points. The Federal Reserve would likely respond with more aggressive interest rate cuts to counter the slowdown, but that brings its own challenges. If inflation rises along with supply chain issues, the Fed's ability to act could be limited. However, Lee remains moderately optimistic, noting that even in the worst-case scenario, these disruptions are likely temporary. While companies may miss near-term earnings estimates, the market's long-term outlook remains positive. These are short-term headwinds that shouldn't deter long-term investors. One of Lee's most interesting insights is learning from history. During times of war or conflict, markets have often defied initial fears and recovered more quickly than expected. Lee notes that barring the extraordinary circumstances of 2022, buying during times of conflict has generally been a good deal for investors. That's because markets tend to price in worst-case scenarios quickly, leaving room for upside once the situation is better understood. For example, both wars in Iraq saw an initial decline in markets, followed by a recovery as investors realized that the long-term impact was not as severe as feared. What is the lesson? Although markets are unstable in the face of uncertainty, they often find their equilibrium once the worst-case scenarios are fully understood and priced in. Finally, Lee touches on another crucial factor: China. China's stock market has been one of the best performers this year, thanks to aggressive government stimulus measures. While some, like hedge fund manager Kyle Bass, are skeptical of China's long-term prospects, Lee believes there is still room for growth in the short term. Over the past decade, the Chinese market has significantly underperformed the US, losing over 7,000 basis points. So even if the Chinese market doubles in the next few years, it will still be lagging behind. Lee believes that despite the long-term challenges, there is potential for short-term gains, especially if China continues to stimulate its economy. Where does all this leave us? Tom Lee's outlook for the coming months is optimistic but cautious. He sees the potential for Bitcoin to take off, driven by ETF approvals, shrinking supply, and favorable market conditions. At the same time, he recognizes the risks posed by geopolitical tensions and supply chain disruptions. Ultimately, Lee's advice remains consistent: stay informed, prepare for volatility, but don't be afraid to buy dips when opportunities arise. History shows that markets tend to bounce back from even the most difficult circumstances, and those who remain patient often emerge victorious. With that said, thanks for following us this far. Don't waste your next crypto flight. Thanks for being with us. If you want to stay updated on the latest news in the crypto world and not waste a crypto adventure, hit that follow button and activate the bell. Ready to go? Then see you in the next video.